Hey guys, I'm doing a weekend update for you on the trades from last week, specifically the trades that we're still holding as swing trades and the post earnings plays on Friday as well. So, as previously mentioned, the Zillow trade is still in play. And it's not doing so hot right now. So, you can see, the second half of the trade is not doing so well. So, really, my stop should have been right here at 49.68. So, as a reminder, I purchased some Zillow over the high of the earnings day. So, right here at about $50, the first target was 51.06, where I sold half the position and retained the second half, just for like continued upside. The targets were 52.05, and then there's a 200-day moving average around the same area, which is where I thought the stock would take a little break and potentially turn back over. Because long term, I think this stock is probably going to have some weakness underneath this longer term trend line since it was pierced on the day of earnings. So I'm looking actually for the stock to go down below this trend line for a break and a trade to the downside. Didn't think it would happen this quickly. So, and only because this hammer pattern emerged on Thursday, it's the only reason I kept this stock. I should have actually sold it underneath 49.63, which was should have been where I pulled my stop up to from the day after earnings. So I'm a little in the red on that second half of the position right now. I'm going to use this line as my stop just because of the action. And if it does breach the line, I'll sell that position and actually will take a short position down to 46.30. So that, it would be my first target. So unfortunately, I'm still in this. I'm, looking to maybe see a little. It could potentially bounce around here. So if it does and makes its way back up to this 51.06 and makes a a higher low from the earnings day to Friday, if this low is not breached, I won't sell the Zillow position. So this low is almost the same price as the long-term trend line. So I'm going to use this low as my stop. And then obviously then it would have made a higher low rather from the earnings day. So that's Zillow. Still have it. And we'll continue to monitor it for continuation, potentially to the upside. The next position that we're in is GDX. So GDX is the gold miners ETF. And if you recall, I bought a put in GDX a few days back at the break of this pivot and longer term multiple time frame, like over the course of the past couple of years. Pivot, which is a support line. So it did break it last week when I did purchase a put on the 7th. Right now my stop is the $20.90 pivot. So I still have the position and we'll be looking to continue holding it and just pulling my stops down with the stock or the ETF as it goes down. My first target is going to be actually this 1850 level, although I did put an alert at 1949 because it does have, if you take a look on the weekly chart, there's a little gap right here at the 1949 level. So that might be an area to just keep an eye out for. So it's not going to be a hard stop. It will be just a mental stop. So that's GDX. We're holding on to it, and our targets. Next is Booking.com. This is a stock I was actually looking to trade to the short side after earnings. You can see here, well, you can't really see. Hang on a sec. Okay. So you can see here after the earnings day, it had some action, just kind of a relief rally off the earnings fall of almost 150 points. So I was looking for it to bounce down off of this longer term trend line here, this red line. Let's change back to the daily. So we had this longer term trend line that I was looking for it to bounce up to and then kind of back down towards. Unfortunately, it showed a little bit of weakness on Thursday, so we didn't have a trade. My trade, actually, I did take a trade. Let's clarify that. I did take a trade off of the first 5-minute bar. I didn't wait for it to go below the first 5-minute bar before buying a put, so I actually broke my rules and ended up getting stopped out on this bar right here, the second 15-minute bar high. So, because this gray box is actually a gap, you can see from back here in February. Entering the gap, I really didn't want to get into risking it filling the gap or going all the way up to the 50% retracement of the drop that it had on earnings. So I just got out of the position, and then I was going to look to re-enter after it crossed back down below the long-term trend line over here. So you can see on Friday it actually did that. It popped back up to the trend line. Actually, the first 15-minute bar went up to the trend line, almost up to the bottom of the gap, and started coming down. So I actually, if you look at a 5-minute chart, bought a put on this bar here. So like just underneath this first red bar after the rejection of the trend line and of the gap. So, we had a target of 1900 and really the long-term target was this other trend line here, which it did hit almost. So first part of the position was sold at 1900. So put at 19, I think it was 1913 is when I bought the put, and then ended up selling one of them, 2 puts. So I sold one of them at 1900 and retained the second one, although I had a little risk here to the upside during this move, but it did not cross above the 1918 level, which is my stop. So I held on to it, and it went all the way down to almost this trend line, and then kind of circled back up. And this is actually where I sold it, in this area here, or sold the put, because it started curving to the upside again. It was the end of the day, swing trade, 1 day, 2 days. That was pretty good profit for that 1 day period. So I went ahead and sold it before the end of the day. Now, I will be looking to re-enter Booking.com to the downside if it crosses through this trend line, which is I expect it will at some point. Whether that's tomorrow, Monday rather, or, it could kind of consolidate in a bear flag and then come down. So I'll be watching this trend line for a break. And when it does break that trend line, if it does, I will trade it to the downside with a target at 1870 here, which is this next pivot. So that's Booking.com. Lastly, from our swing trades from Thursday and prior, we have Roku. So Roku, if you recall, had earnings on Thursday. Let's see. Yep. So it had earnings on Thursday. We bought it over this first 5-minute high on Thursday for a gap and go play. Held it because of the strong pattern it had on Thursday, which is a bull flag. And that strength continued into Friday. So Friday we retained, like we still had the position, rode this extreme strength up through the all-time high of 58.80, which was actually my target. I did not sell right then because of the strength. I did sell half of the position here on this second red bar as it was coming down from 60. Because 60 is a round number and a psychological level, I went ahead and sold half the position. But I still think Roku has strength, considering it made it through the all-time high. Unfortunately, towards the end of the day, you can see it showed some weakness. The market actually was weak as well. So I still have my position with a stop below Friday's low. So I'll be holding on to it. Unfortunately, it looks like just from a daily chart, that does look like a failed breakout. But I'm giving it the benefit of the doubt because the market was weak. And so this continued weakness below here, this little section could just be because of the market weakness. So I'm going to monitor it closely on Monday and see what happens, and we'll sell it if it gets below, Friday's low. If not, I'll keep a hold of it, and my target would be probably, if you take a look at a Fibonacci extension from the bottom of the pattern that it was forming, which is the reason that we traded in the first place, this reverse head and shoulders pattern. I just threw a Fibonacci from the low to the high of that pattern, and an extension of that, because this is an all-time high, would be around 65.45. So that will be my first target if it does continue up through the all-time high 58.80. Well, today, as of today, it's the all-time high 60.65. So that's what I'll do. That's Roku, and we'll just continue to monitor that. So moving on into the plays from Friday's earnings reports. So we had 4 stocks that we were looking at: DBX, TTD, PLNT, and OLED. So we'll start with DBX, which is Dropbox. It fell pretty hard off of earnings as well, and what I wanted to happen was for it to kind of make its way back up to this trend line here, and kind of turn back over and sell. I would sell into that weakness. It did not do that. It actually kind of retained its bear flag, I guess, type of position from the earnings drop, and it's just consolidating here. So no trade on Dropbox. That's just it. That was the edge we had, and I didn't see any real play there. So no trade on Dropbox. The next one is TTD, which was an incredible trade, actually, an incredible strength in this stock, on earnings. So if you take a look at this, is a weekly chart of TTD, which is the trade desk. Excuse me. And it actually was a perfect gap and go play. So what I mean by gap and go is I usually look for a continuation of a gap or a failure of a gap. What our analysis was from the day before earnings, the day before yesterday, so Thursday night, was that due to the strength here, even after earnings, it just kept going up, grinding higher, up to this 117.06 pivot, an all-time high. The consensus, that I came to, or the decision that I made, was that if it continued to go after the open at the first 1 minute bar, so we used the first 1 minute bar, which was 117.06, as the buy point. And I'm sorry, I said that completely wrong because I saw 117.06 on the chart. So 117.06 was actually the high of the 1 minute bar from Friday. And so the buy point was over that 117.06, which is where I bought into the stock. The strength off of that move was just absolutely incredible. So it went from 117.06 all the way to 130.84. What a huge move. So I just kept trailing the stops up. This actually almost shook me out, because if you take a look here, let's go to the 5 minute. So this move here did go down a good bit, this red bar, but because my stop was pulled up to this area right here, this second 5 minute bar, I just keep pulling my stop up. So that's about where my stop was at the time. Here is where my stop was at the time that this red bar hit. So I had pulled it up to 122. So it didn't hit that, so I actually retained it. I retained it through that up move up to 130. But as it came down here and kind of made this little bear flag and dropped again, and started making a bear flag again, I actually sold it right here. You can see that's right at the same level as this prior low right here on the 5 minute chart as we're going up. So this is a little bit of a tiny pivot on the 5-minute. So I went ahead and as it crossed down through that and started consolidating in a bear flag formation, I went ahead and sold it. So I didn't get the full move, but that's a pretty good, $10 move in a stock in the first few hours of the day. Huge move in the trade desk, so it's a good trade. Hopefully some of you took it with me. All right, so the next trade that we made was Planet Fitness. Actually, sorry, we didn't make this trade. We were looking to make a trade on Planet Fitness based on its earnings. So Planet Fitness had earnings, gapped up on Friday. You can see it gapped up and made a big, huge doji, and that means it's just got a tiny bar with two tails on either end. So, that action was kind of weak, and my trade on Planet Fitness was going to be as it started coming down below this long-term trend line. I wanted to fade it off of that trend. I didn't get a chance to do so because it's a really huge. It's a long line. It was just from the prior high, which was an all-time high. And it's just a very long-term trend line. So I believe it's from the prior. Actually, let me pull that back and show. And I think it's even longer than that. This is a longer. Let's go back. Max available. I think this trend line's a little bit misplaced. It should be on the. Yeah, it should be a little lower than that. Let me see. Yep. Let me activate it and move it down. Yeah, that's where it should be, right there at the top of that high, all-time high. I don't know why it's not staying where I want it to, but let's try that again. Okay. Yes, so the action for me was to trade it underneath as it broke through the trend line there just for some weakness, but it didn't actually get that far, so it stayed above this trend line, so I had no trade on it. I honestly will still keep looking for a trade underneath this trend line just because I personally don't think Planet Fitness, my thesis on the stock of Planet Fitness with the parabolic move it's made, as you can see from the weekly, it's just incredible. Okay, I need to fix this whole trend line. Anyway, I'll fix the trend line later. But overall, you can see this parabolic move that it has made over the course of the past few years. And I just expect a little bit of weakness anyway. So I'll have a swing trade ready as soon as it crosses through wherever that trend line ends up. It's actually right where this doji is. I don't know why it's moved around, but it comes up like right around here. So I'm going to look for some further weakness below this low. If it does get below the low of Friday, I'll look for a trade to the downside for this little gap fill right here up to 49.71. So that's my target on any weakness. So that would be $3, and that's what we'd be looking for that trade. Not thinking about any kind of longer term negative movement in the stock or downturn, just a short term swing trade for a gap fill on Planet Fitness. So we'll keep an eye out on that. No trade though, and there was no trade on Friday. The next, and I believe our last trade setup on Friday was OLED or OLED, Universal Display. So the analysis of this trade on Thursday night was that if it gapped and kept going off of a first 1 minute or 5 minute bar, the trade was you could buy it up to the resistance of 117.38, which is a pivot you can see here on the daily chart, and then potentially if it went through the 119.14 level, you can see it actually did show some pretty good strength off the open. The trade was to buy it above the first 1 minute bar of 113. It went all the way up and almost immediately to 117.10, and then kind of chopped around most of the morning until it broke back up and through 117.38 and started trying to make its way towards the 119 level, but it failed and came back down. So if you were to trade this stock and follow the rules that we talked about on Thursday, you would have bought it at 113 and got out of it just as it started failing back underneath this 117.38 level. So you could have held it through this, or you could have sold it right when it hit that target. But really, if you didn't sell it and were looking for continued upside, you should have sold it at this bar right here. So that would have given you a good $4 profit in OLED, which is the trade that we took. So it was a pretty successful earnings week last week altogether. We had a number of good earnings trades that we took. I think Yelp was the only one that we were negative in, that we are negative in so far. So I will be putting another video out this weekend evaluating some swing trade strategies that are non-earnings plays, but they're swing trade strategies for next week and moving forward, just things to watch for a couple of stocks that look really good for a swing trade setup. So I will talk to you guys soon. I hope you enjoyed the video. If you do, please subscribe, and you'll be notified of any new videos that I put